So let's talk about investment and investment options. For Kenyans, how you can diversify your investment to avoid loss. And this is all that talk of not putting all your eggs in one basket. Okay? Our guest today has come with the baskets and he's going to tell us how. Who has the eggs? Ndu? Who carried the eggs? They were out there. We left them out there.
Eric, you put the cart before the horse here, really. Okay, eggs. You cannot discuss eggs without discussing chicken.
The chicken.
Yes.
So you should be asking who's holding the chicken.
Well, who's holding the chicken?
Yes.
Okay. Nahashon Mungai is the Executive Director in charge of global markets at Standard Investment Bank. Nahashon, good morning.
Good morning to you.
Thank you very much for joining us. Welcome to the Situation Room.
Thank you. Thank you for having me.
Have a good time as you occupy the hot seat this morning.
Thank you.
Warming it up just a little bit for you.
Okay.
Let's start by you explaining to us what Standard Investment Bank is.
Okay.
We know very many standard banks in this country.
Yes.
Are you affiliated to them or are you different?
That's a very good question, and thank you for having me on your show. So I'm Nahashon Mungai. I'm the Executive Director in charge of global markets at Standard Investment Bank. So Standard Investment Bank is a fully indigenous investment bank. So no relation whatsoever to Standard Bank South Africa. We just have the same name. But we've been around for 26 years now. We were founded as Standard Stocks in 1995 and now are one of the top investment banks in Kenya.
What is an investment bank? Because when you say bank,
Yes.
I think banking hall.
Yes.
I think accounts, savings accounts,
Yes.
current accounts. Nowadays, they even offer you a foreign currency account.
Yes.
Okay?
Yes.
Then, if you really have oodles and oodles of money, fixed deposit accounts. Okay? Those are the things that we come across. So, what do you do? And why do you call yourself an investment bank instead of just calling yourself a bank?
So as the name suggests, an investment bank primarily deals with investments. So helping investors or helping institutions, individuals, fund managers put their money to use in capital markets. So if you're looking to buy shares, if you're looking to buy bonds, if you're looking to get some sort of advisory work, mergers and acquisitions, listing of your company, you don't go to a commercial bank. You come to an investment bank. So that's a difference. So we don't give loans or open accounts and take deposits from investors. We just work, from the public. We just work on behalf of the investors, those who are looking to make investments. That's what we do for them.
How do you make your money then? Because you don't take money from these people. You just organize things for them.
Yes. We take
charity
commissions.
organization.
It's not a charity organization. Far from it. Far from it. So we help. For example, if say you buy or sell shares through us, there's a commission that we charge, and that's how we make our money.
So essentially, what you're saying is an investment bank
Yes.
manages portfolios for people, whether it is shares,
Yes.
whether it is, you call them bonds, isn't it?
Yes, government bonds,
Yes.
corporate bonds, any
Yes.
type of bonds.
If I have a business and I want to make it public,
Then
I
you
come
come
to
to
you
us.
to advise on how that should work.
Absolutely.
And are your doors
Absolutely.
open, Nahashon? I mean, in terms of who, because when we hear these hoity-toity names like investment bank, and we think to ourselves, okay, it's only for a particular cadre of society, only people who've amassed a certain amount of wealth that can then now come and knock on your doors and say, can you help me? So for the person who has their little, amounts of money every month and says, all right, is there something I can do investment-wise? Then perhaps you would not be able to listen.
Yes, we
to
can
those
still.
individuals.
No, we listen to everybody. So from the retail investor on the street to the high net worth individuals to institutional investors. So everybody, our doors are open to everybody. There's something for everybody. So a retail investor who's looking to grow their portfolio from as little as maybe just buying a few shares in the stock market, we can help that investor. To an investor who's as large as, say, a company like Safaricom, for example, looking to do an IPO. So we're able to deal with all those types of investors, and there's something for everybody. So the doors are open. Yes.
What's the difference between an investment bank and a stock brokerage?
So a stock brokerage is part of so an investment bank is bigger than a stock brokerage firm, but a stock brokerage can be domiciled within an investment bank. So, for example, within Standard Investment Bank, we still have a stock brokerage division. So, a stock brokerage simply just buys and sells shares on behalf of investors, and that's about it. But an investment bank will do that amongst other things. So we'll buy and sell shares on behalf of investors, but we'll do other things like advising them. We can create funds. We can do discretionary portfolio management for them. We can do advisory work. So a bit more universe of assets that can be handled by an investment bank.
And who regulates you? Sorry, Siti. Who regulates you? Is it
The Capital Markets Authority,
Okay.
CMA,
So not a CBK?
not the CBK.
Okay. So this separation of functions, what you're saying is that it's in our laws, isn't it?
Yes.
Are there countries in the world where what we call regular banking and investment banking are more or less one and the same thing?
Well,
Or are they part and parcel of the same sort of like basket?
Well, if you go to the West, for a very long time, especially before what you call the Dodd-Frank Act, there was very little to distinguish between investment banks and commercial banks in the West. But now they're very much similar to what we have here. So you have to separate investment banks from commercial banks, even if they fall under the same entity. So you can find an entity like, say, JP Morgan. It will have a commercial bank inside and an investment bank inside, but it's the same entity. But yes, the divisions are very important. And by law and by regulation, there needs to be Chinese walls between the two.
Why?
It's actually really to protect investors.
How?
By making sure, for example, if I take your money and I'm investing for you, I'm acting at absolute goodwill and without intertwining it with my capital. For example, if I'm running a commercial bank and, for example, I'm looking to make a profit off a certain stock, I need to be able to buy and sell stocks on behalf of my investors without jeopardizing them by buying at a preferential price to myself, which is called front running.
Right, but if you are buying, you offer financial services
Yes.
for people who are interested in buying, selling stocks and so forth.
Yes.
The process of buying and selling involves getting money, and money will be gotten from what we call regular banks. Is that not so?
Well, if you're investing in capital markets, your source of funds can come from anywhere. Not necessarily
Like, for
from
instance?
banks, from whatever business you engage in.
Yes, but banks are never. For instance, if I wanted to buy shares from you, isn't it?
Yes.
Would you allow me to bring a gunny bag full of cash in order to buy shares? Or would you prefer that I conduct the business through some financial service offered by a bank?
No, of course you'd have to bank it.
Precisely.
Yes.
My point. So
Yes.
what I'm saying is,
Yes.
I like the point you made about separating the functions for purpose of protection.
Yes.
But really, where is the protection? Because at the end of the day,
Yes.
you still have to involve yourself with banks. So if just because you're not part of the bank
Yes.
doesn't mean you cannot collude with them.
No, the protection comes in information. All right. So it's not really the access to funds. So when you're executing a trade, there's a certain price that we will know of. All right. So when we are buying or selling on your behalf, we help you to execute the trade. That is really an information advantage. It's not about the source of funds. Source of funds can come from anywhere, from your bank. If it's small amounts, it can be cash. But typically, the information advantage is what we are discussing here. Not really.
You see where I'm
the
going
money-
with this
the money
is that
itself.
when the moment you have regulators,
Yes.
it means you require regulation. Why do you require regulation? Because human beings, being what and who they are,
Yes.
I think you get the drift of what I'm saying.
Yes, of course. The reason why regulation exists is to protect investors.
Precisely.
And I agree with you that when money is involved,
Yes.
there are certain risks that come with it if humans are involved as well.
Yes.
That's why regulation is there. That's true.
A common phrase that is used in your industry, something called insider trading.
Yes.
Okay?
Yes.
And it can't be just, for instance, those who are investment banking.
Yes.
It has to involve a larger group of people for it to actually work. Because at the end of the day,
Yes.
there are financial benefits to be derived. Is that not so?
That is true.
Precisely. Now,
Yes.
let's talk about protection. This protection that you speak of.
Yes.
How do you ensure that the investor is protected?
Okay, so how we ensure that the investor is protected is one, we have very clear Chinese walls. So for example, if you come to Standard Investment Bank, you'll find that the side of the investment bank that invests on behalf of investors is very different from what you call the execution side, where we buy or sell based on orders that we receive from clients. Because those are two very different scenarios. If I'm investing on your behalf, I'm essentially just working for you. I'm buying and selling shares, hoping that they'll gain value, for example, the same way you'd want to do it for yourself. But on the execution side, so what Eric referred to as stock brokerage, I'm just buying and selling based on your instructions. At that time, it doesn't really matter to me whether you're making us or losing money. It's really just buying or selling. So that's one of the ways now the regulator then protects investors is by separating those two functions. So they're very different.
Why must those two be different, though?
Because
So who is going in the case of SIB? So you
Yes.
have those two divisions, and like you say, they are separate.
yes,
Are you saying that the execution is receiving orders from the what did you call the other division?
the buy side.
The buy side.
Yes.
So the buy side is the one that advises me as a client and tells
Yes,
me,
the
"Let's
buy
look-"
side can actually invest on your behalf.
Okay.
And
And
can
bu-
actually invest on your behalf. So to give you an example, for example, in SIB we have a fund called Mansa X. You know, if you have invested in Mansa X now, you're on the buy side of the business. So we buy and sell on your behalf. So why do those two have to be separate? Because, for example, say he has bought or has placed an order to buy a stock at say 20 bob.
He is called City Muga.
City Muga.
Yes.
Sorry. So City Muga has placed an order to buy a stock at a certain price. Okay. I can, to the benefit of my investors, for example, go and buy before I execute his order. And it's called front running. Okay. So that's a very serious crime in our industry. And it can be done if those two roles are not separated. Because if I have that information, I will act on it. So that's how they separate those two functions. And that's why they do it.
So the industry survives on the promise that it is fair and that it is transparent.
Yes, and with a lot of regulatory oversight to ensure that. Yes.
That is not encouraging.
It is very encouraging. It is very encouraging.
The
I can
more-
guarantee you.
regulatory oversight is not encouraging.
I
No,
can
a
guarantee
lot
you
of
there-
regulatory
there's-
encouragement.
I think it's
No.
encouraging, City.
It's
not
very
en-
encouraging because I
No,
mean
it's not encouraging.
every
It means that
industry
these guys are not
Yeah.
operating without someone watching over them.
correct. And every industry is to some extent required. I mean, even the media, for example, I'm sure there's some regulation
Yeah,
that
Some,
allows
a lot of it.
a lot, isn't it?
Yes.
The same thing with us. So same thing. Any industry requires regulatory oversight. Of course, there's goodwill by the participants.
Sure.
Because if we engage in nefarious activities that undermine our industry, we stand to lose anyway. All right. So there's already a lot of self-regulation by the industry, but overall oversight by a regulator is something that every industry has to have.
Okay. So can we look a little bit then about investments in the country at the moment?
Yeah.
And obviously, because this is the space within which you guys are swimming in right now. And if we just look at what happened specifically with COVID over the last 1 year,
Yes.
there was a lot of wishing that, had I had an extra amount of money, I would have put it in this place and then I could be now living on my returns if I lost a job, for
Yeah.
example.
Yeah.
So what are some of those spaces that Kenyans can now or can look to play in when it comes to investments right now?
Okay, that's a good question, and it's nice that you brought up the aspect of why it's important to have investments like this as a nest egg. So let's just go to traditionally what we've always had. So typically, I'd say for a very long time in Kenya, what you had access to was investment in stocks, investments in real estate. And real estate was very popular and I think continues to be very popular amongst Kenyans.
Right.
Then you have investments in government bonds. Not that very well known, but was still there. So those are the investments that Kenyans had. And they all vary in risk. Okay? So government bonds are perceived to be the least risky. That's because it's assumed that the government can never default on its debt. This is why you essentially are lent into the government, different tenors from as little as 91 days to as much as 30 years. And all these come with different interest rates. And so that's one of the investments that a Kenyan would have had. The other one would have been directly investing in the stock market. So you come to Standard Investment Bank, for example, and we buy shares on your behalf. And from these shares, you make two returns in two ways, either by the share appreciation of price, which is called capital gains, or the dividends that you earn from those stocks. Then the other one now would have been maybe investing in real estate, either by buying land and hoping that the land will gain in value, or maybe investing in property and earning rent or yield from that. Then the other investments would have been probably investing in the various funds that exist in the country. So there are various funds, from money market funds to balance funds to equity funds. So that is what you would have probably been looking at. But in 2016, Standard Investment Bank worked towards creating a product that would have helped investors be able to have exposure to more assets. And that's why today's conversation was very interesting for us, because you are focused on why diversification is important. And diversification is important for a number of reasons. The first one is the fact that it's important for you to minimize the risk of loss.
Sure.
So as an investor, you will not be able to minimize the risk of loss if you do not diversify the basket of eggs that you talked about. Then the second one is obviously the need to preserve your capital. The third one, the need to have an average, higher than average return. But then there's also another very important factor that nobody talks about, just liquidity, the ability to access funds as and when you need them. So going back to your example, so we created a fund called Mungai. It's a multi-asset strategy fund. And this fund is, in my opinion, one of the best diversified funds that you can invest in. Why? Because we invest in all the asset classes that I mentioned earlier, but then we throw in even more. So we give clients exposure to markets in other markets. Exposure to financial instruments in other markets, in the US, UK, So if you're invested in Mungai, for example, you have exposure to stocks like Facebook, Google, Amazon, which is very unique in our market. And the reason we did this was because we feel that diversification is not just a factor of how many assets you have in your portfolio, but even where they're domiciled. Because the Nairobi Stock Exchange might be doing poorly this year, but probably the New York Stock Exchange is outperforming, which is actually a very good example. If you saw what happened last year, things might have been looking very gloomy on this side of the world, but in the West, because of the Federal Reserve stimulus, things are actually looking very bright. Yeah. And this is why this fund was still able to return 24%, 23.75% to be exact last year before our fees. And this is really just a factor of diversification.
If you brought it home, really brought it home. So what are Kenyans looking at? The average Kenyan, for example, who wants to look at this diversification of investment, what are they looking at? 50,000 shillings, 100,000 shillings,
all right,
million bob to be able to get in on this party, as it were?
Okay. That's a good question. So when it comes to a fund like ours, the minimum is 250,000. If I was a typical Kenyan, then one way you can replicate a fund like that by starting slowly. So if you're looking at the stock market with as little as 10,000 shillings, you can create a portfolio and you can start there and build it over time. If you're looking at investing in government bonds, the minimum is 50,000 shillings. And again, you can have a portfolio mix of that type. So it's your risk and how you diversify your portfolio is also dependent on how old you are. So somebody older might be more biased towards a less risky investment portfolio mix. So you probably have more government bonds than shares and alternative investments, and the reverse for younger people. So if you're younger, you probably would want to, or you'd be advised to have more risky assets in your portfolio so that over time they'll outperform a normal investment. So bring it again to a normal Kenyan. If you come to Standard Investment Bank, we'll give you advice on what you can get into with whatever you have. And it's something that if you're disciplined enough can grow into a substantial sum over time. Yeah.
So with all those, any ordinary person who has 10,000 shillings can talk to you, or is it 50,000 shillings?
Absolutely.
What's the minimum? 1,000 bob?
You know what? Even zero. Because it's a journey. Because you might not even have the funds to begin with,
right,
but you can come to us and we can tell you what you need to do to get your journey started. So you can come to us with absolutely nothing, and we'll open the accounts that are required, because these accounts are free anyway.
Okay.
You can open accounts that help you to invest in the stock market, or accounts that help you to be able to buy government bonds in the future. A lot of these processes at the beginning do not even involve any capital outlay. Then we'll then guide you based on what you think you probably earn in the future. We can guide you on what you need to do, and therefore anyone can come to our office and talk to us.
Go ahead.
Is this one of those things where they say, some of the world's wealthiest people then who've made these good decisions about where they invest their money have said things like, you want to get into income streams that can increase even while you're asleep?
Absolutely.
Is this one of those things that we're talking about?
It is
now?
Exactly those things. I mean, the most important thing is to invest in asset classes that, number one, give you good cash flow over time. Two, do not need a lot of your effort to actually do that. So exactly what you're saying. As you sleep, are you earning something? Are you earning some dividends somewhere? Are you earning some coupons from some bonds that you invested in somewhere? So yes, this is exactly the kind of conversation that we should be having. And I know for a very long time, capital markets participants probably did not come out very much to talk to ordinary Kenyans. And this is something that Standard Investment Bank is really working to change that narrative. And one of the reasons for that is because we feel that for a very long time, Kenyans went into a lot of illiquid assets because that's the only thing they knew about anyway.
Yep.
So for a very long time, Kenyans just bought land, they would buy land or whatever. And I just want to focus on land, first of all, because if you're not adding value to land, all right, there's a very big chance that you've just created a problem for yourself.
Right.
Because you've invested money somewhere where, in case of an emergency, you can't access that money quickly enough. And before you ever sell it, you do not get consistent cash flows from that investment. So that's what you call an illiquid investment. And there are so many other options that exist in capital markets that can give you a higher return while still giving you that liquidity. That means the ability to access your funds as and when you need them, and also consistent cash flows.
Right.
Investment opportunities, investment options for Kenyans, how you can diversify your portfolio. And to help us with that is the Executive Director in charge of Global Market at Standard Investment Bank, Nahashon Mungai.
Someone asked about Bitcoin.
Yep.
Apart from reading that it exists
Yes.
and that people invest in it,
Yes.
I know absolutely nothing about it.
Yes.
Maybe you can shed a little light before I actually ask you what I really want to ask you.
Okay. Okay. So Bitcoin is an alternative currency, essentially, created by programmers about a decade ago. And it's based on a program that creates, using blockchain technology, a restricted number of Bitcoins were then created, about 21,000 of them, that you need to use mathematical programming skills to be able to produce, referred to as mining. So essentially, it's like digital gold, essentially. You create
digital currency.
Yeah, it's like digital currency. Actually like gold because it's non-yielding. Non-yielding means it doesn't actually give you any interest. It's really just its value comes out of the fact that it's hard to get. All right? Its value is derived by the fact it's difficult to mine and difficult to acquire. That's where the value comes from. The value doesn't come from because if you hold it, you're going to earn any sort of interest on it. That's what we call a non-yielding asset. It's very similar to what you have with gold. So that's what Bitcoin is, but now in a digital space.
All created by somebody's idea.
All created by somebody's idea.
So that it could be me, for example, going up and picking up a substance from somewhere and creating enough buzz around it
Yes.
to get people to think that it was actually treasured and that it's of great value and
Yes.
there's very little of it available.
Yes.
And I too could also come up with something like that if I have the right networks and such.
You know what? Absolutely. Especially if you throw in one extra ingredient, the inability to replicate whatever it is you've created.
Right.
Saying that, you know what I've created right now, you will need certain tools and effort to be able to recreate it. And therefore that in itself then causes other people to validate your point.
Does it make you wealthier? Can you, if
Who,
you
the creator?
No. This Bitcoin itself, because if
Yes.
we're looking at alternative forms or avenues for investment,
Yes.
and there are people who are chasing after this thing as we speak now. People are going crazy about Bitcoin.
Yes.
Does it? Can you then? Because then, can you retrieve the way you say that you can have access to your money in investments, for example, as and when you need it? I can go into my accounts at SIB, for example, and pull out cash if I need it.
Yes.
Right.
Yes.
With Bitcoin now,
Yes.
as a form of investment, can you say, okay, well, I've traded it, I've mined quite some, I need some cash.
Yes.
Can I go?
Yes, absolutely. It's a very liquid market. It's a very active market. There's also another advantage. I mean, there's another use for Bitcoin. The fact it's very untraceable. It's used for a lot of activities. And 50%, yeah, 50%. 50% of Bitcoin usage is actually illegal activity. Okay, that's another reason why it's so popular. If I've done some nefarious activity somewhere and I need payment, if, for example, we've hacked into Standard Media, for example, and needed payment, we wouldn't ask for it in Kenya shillings. We'd probably ask for it in Bitcoin because it's untraceable. So that's one of the advantages and one of the reasons why it's so popular.
Okay, so what's the difference between now that digital currency and what governments do with fiat?
So first, the regulatory aspect of it. Okay, so Bitcoin is not regulated. Okay, now when it comes to fiat currency, central banks will put,
Hold on, Nahashon, hold on. Not regulated by government.
by government. Yes, absolutely. It's not regulated by government.
Yes.
Is there any other way?
Yes.
Self-regulation.
No, it isn't self. It's
Market regulation.
Market regulation,
Market
exactly. Those who are
regulation.
involved in the business of Bitcoin,
Yes.
there has
have
to be some
regulated
form of
themselves.
regulation.
Yeah.
The fact that it's difficult to mine,
Yes.
difficult to access, that's already regulation.
That's in a sense true. I mean, but yes, so they're regulated by government. So
Yes.
government will put the force of government behind it. That's why it's called legal tender. So Bitcoin does not have that.
Would you encourage, from where you sit with investment portfolio, would you encourage people to go into Bitcoin?
The thing is, Bitcoin is a very volatile asset. And we've had several bubbles and busts in Bitcoin. Okay? Several. I mean, let's even go back as far back as, say, 2013, when we saw Bitcoin Bitcoin rise to as high as $1,000 a coin. And at the time, that was considered a phenomenal rise in the price of Bitcoin. And then it crashed back down to 200 in a few months.
And now?
Now again, then we went back to as high as 5,000. We thought, this is crazy. Then again, crashed back to 2,000. Then rose all the way to 10,000. We thought that was the end. Crashed back to 5,000, 20,000. Now we're at $52,000.
Yes.
So, as a Kenyan, do you look at it in terms of how much is Bitcoin worth in dollars, and then you convert from those dollars to shillings, or is there a direct conversion?
Yes. You have to jump those two hoops. So
Okay.
dollars and shilling. But to answer your question, I think if you invest in as an individual, you probably, there's probably still some growth that will be seen in Bitcoin. Why? Because a lot of institutional hedge fund managers globally are now accepting it as an asset class. Before they were not. Okay, that's part of the reason why it's actually gained. Just that acceptance.
Okay.
As you said, market regulation. So sometimes if those who are seen to be
The big boys.
the big boys actually accept that this is actually something that can be invested in, it gives it legitimacy, and that legitimacy has led to the increased valuation of Bitcoin. I think we could actually print $100,000 of Bitcoin eventually.
Wow.
Yes. The question for an individual to ask themselves is, are you ready for the volatility that comes with holding an asset class like that? For example, us at Mansa X, we are not really allowed even by the regulator locally to invest in this. But if, say, you are investing in this yourself, something you have to ask yourself, one, are you ready for that volatility? Two, are you willing, if it collapses and goes to zero, or someone says that Bitcoin is not real, are you ready for the fact that there's no regulatory recourse on this?
You have
Right.
no one
Because the
to
central
do it.
bank will
away
not back this
with
up.
your loss.
Yes, you just walk away with your loss.
Yeah.
So the CMA will not back you up on this either.
You see sorry, Eric, go ahead.
Okay, I wanted to say Bitcoin is not the only digital currency.
No, there are very many other variations of the same
And
thing.
there's been news that China is also rolling out something of the sort.
Yes, everybody wants in on it, and the Chinese have always regulated their currency. Not regulated, actually sort of fixed their currency. And so for a very long time, the Chinese like to play in spaces where they can actually create something that is unique to their economy. So it's not only unique to China. We've had a lot of countries come up with Bitcoins that are unique to their jurisdictions, even sometimes just to test whether this is something that can actually work and maybe one day replace fiat in any way.
But it functions in the same way as a fiat, because if you were talking about the example you gave of, say, hedge funds, it's a question of it is accepted by what you call the currency, like the banknotes we have that are produced.
Yes.
The reason why it works is because we've accepted it. We've accepted to use it as legal tender.
Yes.
It's the basis on which it is actual legal tender, is it not?
Yes, except for one difference. So this is how Bitcoin does not behave like fiat. For fiat, for Bitcoin, a lot of its valuation is really just because it's hard to get. That's why it's easier to compare Bitcoin to a commodity than actually a currency. And that's why at the beginning I mentioned I would compare Bitcoin to gold more than I would to fiat currency.
You see, if I look at, for instance, as you said, the general acceptability, and you gave the example of the hedge funds.
Yes.
Essentially, it's a normalizing of that particular currency, meaning people who ordinarily wouldn't have considered something that they would include in their day-to-day processes. That's where the element of acceptance that I'm talking about is coming from.
Yes.
So, yes, indeed, it is a rare commodity. just as gold was. But then gold then was used as a standard on which currencies were based. So are we saying that we may see a situation where Bitcoin has the same function as gold once had when it came to backing certain values of currencies?
You know, that's actually possible. Yeah, what you call Bitcoin Cash, where you derive cash out of the value of the underlying Bitcoin. Yes, that's possible. It's actually possible. Yeah. As long as, yes, that it continues being viewed as a valid commodity that's scarce. That's absolutely possible that you can base currencies out of it.
But if you think of the precious metals that were used as a foundation on which currencies
it's the same
were
basis,
based,
yes.
Same, yes.
Same
And
basis,
even
yes.
those were restricted. It isn't as though
Yes.
the world supply of gold ran out. No.
Yes.
It was controlled.
Yes.
Now, let me ask you what I really wanted to ask you.
Yes.
Okay? Insurance companies refer to themselves as financial institutions nowadays.
They've always been.
Well, they call themselves that now. So
Okay.
they become financial advisors.
Okay.
Okay, now, are they competitors to what you do? Do they augment your business? And do you have other competitors, people who don't call themselves investment banks but do exactly what you do or something similar?
That's a good question. Okay, so they don't compete with us. So that's the first thing. They're not competitors. Insurance companies do something that's very different from what we do. They're there to not necessarily advise you on how to invest. They're there to help you, to advise you on what you need to do to protect yourself if something went wrong. And that's fundamentally different. As an investment bank, we assume that you're always there and you're healthy and you're able to come with us and put money with us and invest it somewhere. An insurance company will take your premiums, for example, for life insurance, and if you only make 2 premium payments, all right, if you die, they'll still have to make a large payout as you had originally agreed because of the contract that you had with them. So those two are different in that sense.
So an insurance company essentially is protecting you
Yes.
to be able to operate with an investment bank, for
Yes,
example.
or wherever
It's
else.
protecting you so that you can operate.
Yes, so you
Okay.
can operate. I mean, you can invest with an investment bank, or you can continue doing your business without any fear that if something happened to me and I had not yet built my portfolio with Standard Investment Bank, now my family is going to go hungry.
Sure.
So it really augments the business, so to speak. An insurance companies, for example, the premiums that they collect from their clients, they will actually buy or sell assets in the capital markets through investment banks like us.
Okay.
So they really augment our business. They're actually our clients.
Okay.
Yeah.
Coming back to the issue of the basket and how to diversify then your portfolio. You told us, okay, many things that you can do. You can look at government bonds, you can look at the stock market, you can look at real estate, you can look at funds. At Mansa now you're even looking at international markets. Does Mansa also buy gold?
Yes. Yes.
So
we
you
do.
can actually now come in and say, so I'm putting in this amount of money.
Yes.
Get me some gold here, get me some, or how will you go
So
about it?
so what Mansa does is if essentially just does the heavy lifting for you. So we made these decisions for you. We make these decisions on your behalf. So it's a discretionary fund. All right. So all this diversification we are talking about, it might be difficult for Eric when he's working here to constantly be wondering where is gold trading right now?
Yeah.
Where is oil trading? And these are assets that we trade in Mansa. You know, where is the euro trading against the dollar? Where is natural gas trading today, and so on and so forth. Now, Mansa creates a fund that does all this heavy lifting at the back end and gives you a very simple offering that just give us the money, we'll do all this on your behalf. And that's why Mansa is so special.
With a guarantee that it's the best that you're getting.
With a
in
guarantee
terms
that
of
it's the
options.
best that you're getting. And I think this fund diversifies so well for you that a lot of things would have to go wrong for it not to actually lose your capital. But that's what Mansa does, the heavy lifting for you. And that's the real beauty of this fund.
What are the risks? And the risk here, for example, I hear you say, in the last 1 year you've looked at the kind of investments that you've put in and where you've invested and even got the returns of about 23.5%?
23.75.
23.75%.
Yes.
Now, that is already a catch. When you say 23.75%, someone is thinking, I want to go and invest in Mansa. What are the risks?
Yeah.
Is there a risk that I've put in at on the basis of the 23.75 of the past,
Yeah.
and it could actually now turn out to be 2 in future?
Yeah. Okay. So what are the risks? whenever you invest in different asset classes, if you've invested in property, if you've invested in stocks, if you've invested in bonds, one of the reasons why you really should diversify your portfolio is something called systemic risks. So, for example, if you invest in banking stocks, for example, and something changes, and the regulatory landscape for banks, for example, see what happened with the interest rate capping, that would reduce the performance of your stocks that you had bought. So when you come to Mansa, one of the advantages that we have is spreading out your portfolio so much that there are so many risks, yes, in each individual asset class, but they are minimized by the fact that they are downplayed by the fact that they're really spread out in a portfolio. So yes, within the fund, there are risks that some asset classes will probably underperform and will probably not perform so well. For example, if you look at how gold has performed the last 1 month, it's actually lost value. All right, and these are some of the assets we hold. All right, but it doesn't bother us because we have other assets that have gained value during that period as well. So yes, there are inherent risks within the fund, but they are well managed by the fact that we've diversified for you. And then we have something called, and this is very unique to what we do, we are able to use a long-short trading model, meaning that we don't only make money when asset prices gain in value, we also make money when they lose in value. And that's, again, very unique to us. So are there risks within the fund? Absolutely. But the risk management framework that we have ensures that we are able to give you reasonable returns over a long period of time. Yeah.
What are you advising folks to invest in now? I mean, because we have crazy things going on, different parts of the world where people would have said to have actualized in business. People are investing in space. People are investing in things that for people here would be out of this world, right?
Yes.
So if we domicile these ideas now, what would you say the top 3 or the top 5 that you're advising people to go into, or really like what are the hotcakes right now?
Tech stocks will continue to rise. Okay, last year we saw phenomenal gains in some of these stocks. We're talking about Mansa making 23.75. If you had bought Tesla last year, you'd be up 700% on your portfolio.
No wonder he's the richest man in the world now.
Yeah, I know.
But consider the speed with which the so-called electric vehicles are actually, forget taking shape, they're in your face.
Yep.
Electric motorbikes.
Yes.
Here in this country,
Yes.
we have companies that are actually doing precisely that, replacing
Yes.
these internal combustion engines and bringing. So
Yes.
it really, the future is with us.
Yes, it is. Yes, it is. So tech stocks, obviously, there'll be a lot more requirement for tech stocks. So tech stocks like Tesla making electric vehicles, Internet of Things. So you're looking at chip makers like AMD, Nvidia, those kind of companies. I would advise you to have those in your portfolio. They'll continue. Telecoms companies will continue making money. The internet, internet penetration can only increase, and therefore they can only increase their revenues. Pharmaceutical companies. You have the big 5s, the AstraZenecas, the Pfizer, the Johnson & Johnsons. Those are stocks that it's a no-brainer to have in your portfolio. Commodities like gold, they're good to have in your portfolio in case there's a turnaround in the market. They'll always continue to gain in value over time, and because of their scarcity as well as intrinsic value. So those are the top 5 assets.
Yes. I've listened to you. I haven't heard you mention land even once.
Yeah.
You did say that unless land has some kind of added value on it, then it's useless.
No.
Right? You want to
Thank
build
you. I
something on it,
mentioned that.
right?
What added value are you talking about?
Build a structure on it.
What
for
added value is there in
example.
gold? Okay, all right.
Well, intrinsically,
example,
gold
but-
can be used for jewelry, so in a sense, it has
All right.
value in itself.
And land?
Yeah.
Land,
It's a finite commodity. It's not even
Unless
like
you're
gold.
building something on
Is
it,
it
I think
really?
is what you're
Land,
saying.
it is. It is. Are we going
because you
to
can create?
are we going to increase our boundaries just because we have more people in
You
Kenya?
can increase the number of floors that you do agriculture on, for example, on a single piece of land.
Yes,
It's
you
been
can.
done.
I
Yes.
agree with you completely. But if you have a growing population such as ours,
Yes.
right?
Yes.
Are you telling me that there's a likelihood that the value of land is likely to dip? If you're talking about investment land, is it a volatile investment by any stretch of any imagination?
No, I mean, I'm not disputing. I mean, land is still a good investment.
I know I've come out combative.
Yes, I know. You look like you really like your land.
Yeah, don't talk to him about his land.
Man has invested in
Don't
land.
tell him to go and invest
worry,
in
I mean,
chips
your land
when
is
he's
safe.
got land.
Your land is safe. You still make money from your land over time.
So what would you advise? I mean, people who are getting started on this right now, because again, it's that folks are really talking about. So, if anything, we've learned lessons in the last 12 months, difficult ones.
Yes.
So, how many, would you advise somebody to have in their portfolio as they are starting? Because you've mentioned quite a few. Diversification. So, what would you say? Start with 3, start with 5, start with 1, what?
All right. So, let's first start with the fact that prioritize 3 things. One, have an above average return on your investment. Okay, inflation rate in Kenya is about 5%. If you're buying rental houses, for example, always ask yourself, what's the rental yield on these houses? All right. So C2, if you build apartments there and you rent them out, ask yourself, how much did you buy this land for versus how much you receive in rent per year? Divide that by the other. If you're getting anything less than 5%, you have to really question that investment. All right. So that's the first thing. So just first make sure that the return is making sense
on your land.
The second thing, prioritize liquidity. I think that's one thing people don't talk enough about.
Right.
All right. I'm sure during COVID, people saw the importance of liquidity. People are looking for money all over the place. Can I sell you my car very quickly because I need this money? But when there's a crisis, you find that everybody else is going through the same thing. So nobody's lending to anyone else, and liquidity can dry up. All right, so liquidity is very important, the ability to access your funds. So remember that. Then the third thing is, of course, just get into investments that are sort of minimize the ability to, the risk of losing your capital. Okay, so that's also very important. So those 3 things. But then all these things can actually be done through advisors, which is why we are really encouraging Kenyans. Before you do some of these things, just walk into an investment bank like ours.
Let me ask the question.
Yeah.
Even as you talk about people taking a keener interest in this field of endeavor, what do you do to nurture young investors? Do you have programs that target colleges? Do you have programs that target universities? Have you thought of talking to people who create curriculums in schools when they talk about business education? Do you encourage them to include investment as a topic so that at a very early age people get to understand the importance? Because when you grow up with this understanding, when you are an adult, it is a lot simpler. Do you do this?
You know what? I think probably not enough. And this is something that is something. This is one of the reasons why I'm here. All right.
I'm sending you an invoice.
Yes, please send the invoice. So these are the reasons this is something we are trying to create this awareness. The NSE has had an NSE challenge for a long time. All right. And that is one of the ways a lot of people in the universities actually got interested in capital markets. A lot of people who work at SIB were actually part of the initial NSE challenge. So therefore, of course, I agree with you. You know, that exposure has helped some of them to find that this is actually something interesting, and they've taken that as a career choice or having inculcated it in their investment decisions as adults.
Even customer awareness and training. You're talking to people who, like you said, have for a long time grown up knowing that the best investment is a piece of land.
Yes.
And that's why land companies are proliferating, selling 150 by 100 all over the country.
Yes.
So you're trying to convert my mindset from that and telling me that I'm investing into something, I don't know, some tech stock.
Let me explain
Somewhere
to you.
you've never
I'm
seen the tech
investing in a
company.
piece of paper with something written on it. And that's supposed to have value.
Yes.
As opposed to land which I can see and walk on.
Yes.
And look at my beacons.
Yes. And look at your beacons. Until the day you have a medical emergency.
And you need to sell it.
And you need to sell it, and then you realize there was no value there. Or rather,
Oh no,
the value was delayed.
You see, when someone is already an adult, one of the things is their mind is probably just made up about how they want to go about these things.
That's true.
That is the reason why I brought this discussion.
That is
because
very true.
asking someone to think about investment in a way that's completely diverse from what they're used to
Yes.
is a very difficult task.
That's very true.
Even if it is useful or beneficial,
Yes.
they'll go to the basics. You'll talk investment banking, they'll say stocks. Because that's
That's
as far
it. That's all they know.
that's what they understand.
Very true.
But
Very true.
if you have a larger group of people who understand this,
Yes.
then it is easier for that communication to actually be broad-based. Right now, it isn't.
But you know what I think? Narratives can be changed.
They can.
Just look at how, 5 years ago, if I was living in Standard Media right now to go back to the office, I'd have been waiting for a taxi guy or have to call my taxi guy. Everyone had a
cab
taxi
guy.
guy. I have my cab guy. Everybody used to talk like that.
Right.
Now everybody's using Uber. And that was a significant paradigm shift. And look at how short a period that has happened.
True.
Yeah.
That's very
So
true.
narratives can be changed. And I think
can.
right now Kenyans have advanced so much in so many ways. When you come to the office, you use an Uber, for example. Lunchtime, you order food on some app.
Yep.
When you go home, you're probably just going
You're
to
watching-
stream Netflix or
Yep.
whatever. Things are changing, so
And they've changed
we've
fast.
always felt that
Actually,
even investments can
And they've
change.
changed fast.
Yeah.
Nahashon,
Yeah.
thank you very much for joining us today.
Thank you,
and
thank
we
you.
really appreciate having you. Hoping to have you again soon.
Thank you for having me.
So you can now start teaching us why land is one of the options, but not the only.
And
It's one of the options.
which
Not-
investment?
we are not
only
writing it
option.
off as an
I'm
option.
actually interested in investment where I put 50 shillings
Yeah.
and I get 500,000.
Okay.
That's the one I want you to come and tell us.
So you want to now start involving
pyramid
yourself in
scheme.
witchcraft?
Nahashon Mungai is the Executive Director of Global Markets at Standard Investment Bank. Thank you very much for joining us today. See you again soon.